We're so grateful that you're here today, and we are thankful for this past year that we had together to build and create and grow our wonderful community. We've had a great government that assists us in finding creative solutions to the problems at hand. You can see around, the residential development has just expanded exponentially. We also see manufacturing that is bursting at the seams. Our buildings are full and we're finding places to build more. We have an employment that's at full employment, but yet we need more workers, and we have to create a community that is attractive to those workers. Overall, it's been a phenomenal year, and we're really looking forward to this year, and we're thankful that we get to partner with you in this coming year. And as you hear, you'll see that there are positive and exciting things coming for our great community. Thank you for being here.
We have a great mix in our market of both the typical corporate America national retailers, and then we have these regionals that are much smaller platform, as well as the mom and pop retailers. Quite frankly, the nationals are recognizing how our world is changing and how the younger generations are spending money. Well, mom and pops have become much more sophisticated. They now own microbreweries, and they own distilleries and farm-to-table restaurants, and they're the life behind all this urban retail development that's going on.
2016, we were predicting that 2017 was going to be a very tight market for industrial, that we were going to have a lot of new construction as a result of the lack of supply and the high amount of demand that was out there. We did see some new construction. Most all of it is owner and user driven.
For downtown new construction, we have 234 Market that has 30,000 square feet of office on the main floor and multifamily above that. In the suburbs, we have Heritage Point. They are pretty full now in their second phase, and they have a new phase going up it's planned for 2018.
Being in West Michigan, it's a hardworking value community, and that's one of the benefits. That's why a lot of us choose to live here. But it's also kept a lot of rates down in all of our industry. Now we're seeing with new construction that those rates have to go up. And with the new construction and rates going up, we haven't seen a pushback from the tenants on that. They want the amenities. They want the new space.
In 2017, we predicted that brick and mortar retail is not dead. And that played a significant factor throughout this past year. With all the activity we had in our market, we've seen rental rates increase to all-time record highs. The U.S. Census Bureau released statistics in November of 2017 that the third quarter online retail sales accounted for 8.3% of all retail sales in the United States. And that is up 5% from 10 years ago. So the fact that retail sales online are less than 10% of all retail sales across the country, brick and mortar is still alive and well.
With increased investor activity, largely driven by outside capital from primary and secondary markets, it does create a constraint on available investments in the market, which does a few things. One, it's going to continue to keep pricing high. We don't anticipate significant cap rate compression. However, there will be cost increase in the capital to the investor. So as investors maybe get a little more aggressive, take slightly less yield, cap rates and pricing will largely stay the same due to the increased cost of the debt financing with increased interest rates.
From the buying perspective, although the market is still tight and there is a lack of supply, we are certainly better off than what a lot of the other major markets are. The reason that a lot of those investors would like to place money here is because of the fundamentals that we have here. So we have low cost of living, we have high quality of life, we have proximity to major markets, which is a huge thing for why manufacturers want to locate here. So when you look back to the downturn of 2008 and 9, we went into that faster than the rest of the country, but we also came out of it a lot faster than the rest of the country.
One of the great transactions and changes in the market that happened in 2017 was the redevelopment of the former Rogers Department Store, Klingman's Furniture Store on 28th Street Southwest in Wyoming. The significance there is 28th Street Southwest was our first main retail corridor anywhere in Western Michigan. Rogers Department Store was a staple there. When they left the market, Klingman's tried to utilize that building that didn't work out for them. It's an older two-story retail building that's not useful in today's climate. This past year, that building was sold to a developer, and about 80% of that building has been converted into office.
Historically, West Michigan has not ever been an overbuilt industrial market. There's a lot of folks that are very hesitant to throw space up on a speculative basis. 5300 Broadmoor was a beautiful example of a gorgeous building that was put up 50,000 square feet. That was going to demand a higher price per square foot. You're going to be in the $5 plus square foot range, which is historically fairly high for what West Michiganders are willing to pay. It was a speculative build completely. You have two 25,000 square foot users that are in there, and they're both on 5+ year leases. So that was a great example of how speculative construction, as long as you're building quality product that can deliver to both the manufacturer as well as the distribution type of a company, you can get higher rates today because there's no real other place or alternative to go to.
The average vacancy rate in our main retail corridors is just below 9%. However, realistically, the vacancy rate amongst Class A type of retail space is almost non-existent. And that's where you saw the creativity of Chick-fil-A at Centerpoint Mall. I mean, that site's been there for forever. And then all of a sudden, they were able to discover that, hey, we can squeeze in here and there's plenty of room for everybody still.
The speculative construction market, although we would like to see a little bit more of it, the cost of construction is what was really prohibitive to that. To be able to generate the returns that you would need as an investor in that kind of real estate while also trying to hit your target rental rates per square foot, that is a little bit of a struggle today. We saw some of it in 2017, probably not as much as what we would have liked, but it's still out there.
Last year we talked about parking constraints being an issue for downtown and downtown adjacent users, and it's still a constraint.
It's the number one thing that I'm hearing from tenants, landlords, developers, and I think the city of Grand Rapids has had the attitude that you can't build your way out of a parking crisis, and I don't think that's a viable approach.
There are answers to the parking constraints, but in the short run, I'm seeing tenants that are wanting to relocate out of downtown because not just the expense of parking, but the availability of parking isn't there.
So in the meantime, we do have to build our way out of the parking crisis. There is no silver bullet. It needs to be a collaborative approach that we really focus on how to really solve this problem.
2018, I think we're going to be in the same kind of a boat that's there. Demand is still heavy. We're at vacancy rates that are as low as we've seen, I think, pretty much ever. When you have a need for additional capacity, you have to go look at building it. So even though the cost of construction is high today, you're gonna, if you need that capacity and you want to continue to have a presence here in West Michigan, that's the road you're going to have to go down.
We cannot stretch Alpine Avenue too much further, the core area, or 28th Street Southeast, or Rivertown. So that's where we're really going to be working hard in 2018, is trying to figure out the demand that we are getting from both local and national retailers that still want a home in greater Grand Rapids, West Michigan. Where is that home going to be?
The remaining issues are going to be inventory and excess capital. We hope for a slightly better year in 2018. However, it's pretty well telegraphed that interest rates are going to continue to steadily bump up.
We are in a very active economy. We're in a healthy economy. We're in a very resilient economy. There's been a lot of stuff happening around the world that is very significant, but it's not slowing the economy down.
I think we've got fantastic energy going. I think that the downtown is really thriving. Overall, people want to be in West Michigan. It's a place where they want to raise their families. We've got a vibrant downtown community. We're getting more and more people living downtown, and it just continues to feed itself.
Well, I hope you enjoyed that part of the presentation, and we really look forward to working with you in the future on some of these ideas that were presented. Next up, we have a gentleman named Chris Slocky, who is the Innovation Officer of Colliers out of the Denver office, and he'll do a short presentation on some exciting things occurring in the industry. Following that, there will be a panel of experts, and that'll be hosted by Jeff Hayner, our Senior Research Analyst. and then that'll be followed by a Q&A, so there's certainly opportunity for you to participate and get your questions answered. Thank you again for your participation.